In 2014, I would say that all the macroeconomic factors are gathered to sustain the rate of growth. Supply is still at weak levels, and I'm not seeing a growing pipeline for development. Demand will reinforce as the economic environment and trust comes back. And demand coming from occupiers is getting more specific, focusing on buildings depending on their configuration, size, location, and access to labor pool. In Europe, the places that will combine infrastructure, a high consumer density, and also economic improvement will definitely see this rental growth.
Well, in the context of a fairly gradual economic recovery, supply chain efficiencies are becoming more and more important. There's a realization that growing revenues and profitability just organically will be quite difficult. So the search for different types of supply chain efficiency becomes more important. And we'll see people making decisions across people, technology, buildings, equipment in terms of CapEx. And those decisions, I think, will become more important through this year and beyond. We're seeing the consequences of that in the real estate market already. Certainly at the larger end of the market, XXL warehouses, the consequences of that, or the advantages of that, such as economies of scale, centralisation of operations, centralisation of information, are big drivers behind demand for that type of building, and that will continue through this year. Well, the whole growth of online retailing has been a big driver of leasing demand in the logistics market over recent years. 40% or more of logistics leasing transactions in some markets have been driven by that. And we know that the whole issue of delivery and order fulfillment in ways that is both cost effective and acceptable to customers is a big challenge at the moment for retailers and distributors, and will remain so. One of the consequences of that in property terms will be the need for a much denser network of small urban logistics parcel delivery centres that have the throughput capability to ensure efficient and speedy order delivery.
Investment trends for 2014, the key is increased and sustained investment activity and volumes. From 2012 to 2013, volumes are up by 50%, from 8 billion to 14 billion at the end of 2013. We're seeing an increase in large deal sizes. 100 million plus is a typical transaction level, and there are at least half a dozen deals live that are over 400 million in the market at the moment that our teams are working on. And finally, that's leading to increased yield compression across the market, Germany, UK and Poland in particular, with also increased interest and liquidity for light industrial and secondary assets. For development activity in the sector over 2014, we expect to see an increase. This is partly driven by occupier requirements and growth. It's also driven by pricing improving, feasibility improving, profitability of transactions improving, and the amount of capital chasing deals. I think build to suit in particular is going to be delivering access to stock that is otherwise limited, and one of the key parts of that is that the yield differential for development funding versus buying completed stock is going to be little or nothing. I think another key trend for development is the type and operation of buildings, which is going to accommodate more e-commerce, parcel delivery and fulfilment, and 3PL activity driven by car manufacturing.
In emerging markets, we will continue to see economic growth in 2014. This creates a great opportunity for retailers to continue to expand their networks and then creating a need for modern warehouse to store the goods. We also see that those places offer low labor costs, enabling a competitive advantage when it comes to locate manufacturing.